Hey everyone, thanks for tuning in. Today I want to dive into Linea, the Ethereum Layer 2 ZK EVM by Consent system that's been grabbing attention lately. The market is moving around it, there's both hype and concern, and what happens in the coming weeks could make or break sentiment. Right now, Linea is trading at about $0.02650 to $0.027 USD, with a 24-hour trading volume of around $140 to $150 million USD. Its circulating supply is about 15.48 billion out of a maximum of 72 billion tokens, giving it a market cap in the $400-$420 million range. So it's not tiny, but it's not massive either. It sits somewhere mid-range with room for growth. The major recent headlines around Linea have largely revolved around its token launch and, more importantly, how it's building bridges between crypto, DeFi, and real-world financial infrastructure. One of the biggest is Linea getting picked by Swift for a pilot program. Swift is using Linea's ZK EVM rollup for shared ledger pilots for cross-border payments involving major banks like BNP Paribas and BNY Mellon. That kind of institutional recognition gives Linea serious credibility. Another important update is the airdrop and token generation event, TGA. On September 10, 2025, Linea distributed around 9.36 billion tokens via airdrop to over 749,000 eligible wallets. That accounts for about 9% of total supply, with 1% additionally allocated to strategic builders or early partners. Most of the rest of the supply, roughly 75%, is in an ecosystem fund intended to support builders, liquidity, public goods, etc., over a multi-year period. This heavy leaning toward community and ecosystem distribution rather than large VC-only allocations has been a key talking point. Looking ahead, there are a few possible directions. If the institutional use cases, like the Swift pilot, scale up, that could bring serious demand for transactions, gas fees, and usage. That in turn may help push price up, especially if community participation, staking a liquidity provision, continues. Some traders believe resistance around $0.040 to $0.050 becomes realistic if ecosystem utility follows through. On the flip side, risk is real. Delays or dissatisfaction around token claims, low utility after launch, liquidity drying up, or simply broader crypto downturns could see Linea drift or drop towards support zones somewhere near $0.020 to $0.022. A lot depends on execution, whether the promised rewards, developer incentives, application usage, and institutional integrations actually deliver. In short, Linea is off to a dynamic start. The price is volatile, the distribution is community-heavy, and institutional signals, like Swift, give it weight. But expectations are high, and the market will expect visible proofs, usage, ecosystem growth, and sustainable rewards. For anyone watching the L2 space, Linea is one of the coins you need to watch closely over the next few months.